000 cold open 3 months ago. Alex had no idea AI would warn him about the biggest market dip of 2026. But what Alex did next changed everything. Well, was tense. By the end of this video, you'll know exactly how to use real AI-powered tools to spot the next dip and what to do to protect your investments when it happens. 030 setup. Meet Alex in the 2026 market. Meet Alex, a 36-year-old project manager in Chicago. Like millions, he's grown his 401k and a $52,000 stock portfolio through steady dollar cost averaging. He checks the market every morning, but not an expert, not a gambler. 2026 hasn't been easy. Inflation cooled, but rising borrowing costs, sluggish tech earnings, and crypto volatility spooked everyone.
The S&P 500 hit record highs in February, then wobbled. Message boards buzzed, correction coming, but the signals just weren't clear. The question: who actually sees a market dip coming before it hits? 53 months ago, a friend sent Alex a link. Try Kavout's chi-score. It's pure machine learning, tracks big data, not just headline. Right then he thought, if AI can beat me at chess, can it predict a crash? 200 rising action, the search for answers, so Alex got curious. He signed up for 3 tools: Kavout, BlackRock's Aladdin, and a plugin for Google Bard that scrapes real-time market signals. All AI, all promising to catch trends humans miss. He sets watch lists, starts running chi-scores daily. At first, nothing much. March arrives. Tesla and Nvidia drop 6% in a week, just volatility. But Bard's plugin, using real-time Bloomberg data, spits out a new anomaly. Insider sentiment for S&P sectors trending negative. Correlation with 2022 dips, 89%. Suddenly the AI dashboards don't just watch prices, they're mapping social sentiment, earnings call transcripts, ETF flows, even Reddit posts. That's when the alerts start coming, days before CNBC headlines it. But could Alex trust it? Was this just spam or the real deal? 330 cliffhanger. He decides to test the signal. By the book. He moves 15%, about $7. 800 out of high beta tech into cash, just in case. The rest, he stays put. But what happened next would shake his trust in everything he thought he knew. 400 complications, false signals, real risks. 2 weeks later, the market rallies. AI signals flip green. Alex thinks, did I just dodge nothing? Meanwhile, Reddit roars, AI market panic, useless. He almost moves his cash back into risky stocks, then Kavout flags another anomaly. A sudden spike in high-frequency ETF redemption. Aladdin posts a risk-off alert. Bond volatility spiking, take shelter. Alex is torn. His old-school investing advisors say ignore the machine. But data keeps flashing red again. Here's where it gets interesting. It's March 22nd. Bard's summary model integrates new 13F filings, options data, and even weather-driven supply chain glitches. Probability of a 5% drop within 10 trading days just jumped to 72%. Alex faces a choice: wait for proof or trust the data ahead of Wall Street. 530 cliffhanger. That same week, he gets an even bigger surprise. One signal contradicts everything the others say. 600 climax. The big reveal: Bard flashes a green BUI on energy and consumer staples, even as the broader market looks shaky. Kavout signals high conviction, but only for certain sectors. He doesn't go all in, but he's no longer all out. Instead, Alex follows what the data says: protect risky position. Rotate into defensive sectors, keep cash for the margin calls. Within 8 days, late March and early April, the S&P 500 tumbles 6%. Tech melts down, but energy and consumer staples dip only 1%. Alex loses just 2% instead of 7% on his overall portfolio. But the real surprise is coming. 650 the AI tools start flagging recovery signals weeks before the major banks issue their bullish notes. Alex gets back into growth stock. Beating the indexes bounced by 8%. 700 resolution. Lessons in what you can do now. Let's be real. No AI is perfect. Sometimes it gave false alarms, sometimes it missed noise. But for Alex, following the data, not emotions, cut his losses in the correction and sped up his recovery. Want to do the same? Here's how to build your AI alert system right now. 1. Set up a free Kavout or similar AI scoring tool. Track their watch lists daily. 2.
Use Google Bard with a real-time market signal plugin like AlphaCast or Unusual Whales. Many have API/extension support in 2026. 3. Follow BlackRock's Aladdin portfolio risk dashboards. Many retail brokers now integrate them, like Fidelity and Schwab. Don't move your money on every alert. Look for signals that agree, follow defensive rotation, and never invest money you can't afford to lose. Disclaimer: this is not financial advice. These are tools, not guarantees. Always do your own research. You've just seen how AI really changed the game in the 2026 correction. Hungry for smarter moves? Hit subscribe now. And if you want to see how these same AI tools spot passive income opportunities, watch this next video on AI-driven side hustles in 2026.